My name is Larry Kallevig, founder and CEO of the Haven Financial Group. Every week we talk here on the Haven Financial Group about the radio show about discussing your retirement, the crucial decisions, financial topics. Today will be no different, Kim. Listeners can give us a call at 612-504-8400 or visit us at havenfinancialgroup.com. We'd love to hear questions, concerns, and on that site, our Haven Financial Group site, you can see all kinds of retirement tools. Great to be with you, Kim.
Great to be with you as well. And I understand we have a guest with us today as we talk about the power of simple retirement principles. Kyle Thomas is with us. He's a certified financial planner on the investment team there at Haven Financial. Great to have you, Kyle.
Yeah, great to be here. Thanks for having me.
Yeah, we're always glad to have you join us. That is for certain. Larry has told you if you'd like to reach out to Haven Financial Group at any point while you're listening here at 612-504-8400. Gentlemen, we're going to talk about the power of simple retirement principles. Let me run through some of the subjects we plan to hit. Understanding compound returns. What can dividends do to your retirement? Then we're going to discuss the power of the Roth. And finally, Secure Act 2.0, the changes in 2025. 2025, Larry, just around the corner. Boy, it's coming fast, huh?
It is fourth quarter, and Thanksgiving will be here before you know it, Christmas, and then 2025. Can hardly believe it, but you know how fast the time flies at this time of the year.
Yeah, it surely does. You know, I feel like once we hit November 1, it's like it's just a boulder that just keeps rolling until we finally get there to January. Well, let's get started and talk a little bit about the first subject that I mentioned today, which is understanding compound returns. Larry, I'm going to let you take this because this is something I'm not really, all that prolific with. So I want you to get us started on this. And then, of course, we need Kyle to jump in with us as well.
Yeah. And again, Kyle is the certified financial planner, one of several on the team. And he knows well about compounding returns, which is so powerful that if I could go back a little bit in history, Albert Einstein called it the eighth wonder of the world. He who understands it earns it, he said. He who doesn't pays it. Compound interest is the most powerful force in the universe, he said. And it's the greatest mathematical discovery of all time. Now, that's putting it very powerfully, as he did. But as it relates to retirement and money and your finances, compounding interest over long periods of time, and of course, when we're talking about retirement, we are talking about typically longer periods of time. So it's very, very powerful. And that's why we encourage, as everybody expects me to say, younger listeners, younger folks to start this at an early age, even if it's just a little bit over a long time can equal quite a bit when it comes to retirement, because you take X amount of dollars with a certain percentage rate over 30, 40 years, you'd be surprised how much you can come up with. And again, understanding that there needs to be some things that go together with this. When it comes to this, you must reinvest those earnings, stay on the plan. You must generate a positive return over time. Of course, there's going to be ups and downs. And you must use time in your favor and take advantage of that. So again, encouragement would be start early, understand how it works, the concept, and I'm surprised how often when people have a negative downturn in the market that they don't understand how much it takes to get what they lost back. Mm-hmm. Now, if you're younger, maybe that doesn't make a big deal whatsoever because that 20, 30-year time frame is so much longer. But when you're sitting down to folks we do that, that timeline is maybe 5 years or less to retirement. And if you lose 50% of your investment, say $100,000, you need 100% just to get your money back. So that's why it's so important. Number one, you get started, you use time in your favor, be consistent, and that's why it's having a plan, and it can make a major difference for your retirement.
Mm-hmm. So, Kyle, let's talk about some of the strategies that could be employed to maximize the benefits of compounding.
Yeah, well, compounding interest is one of the most important things that I use when I'm talking to, especially young people, in their 20s or 30s, because you can just show such the big impact that it has for them. If you start young and you have 30 or 40 years of investing, well, that can make the difference of hundreds of thousands of dollars by the time you're done investing that and you're actually taking withdrawals from that. So some of the things that are really important in that are dollar cost averaging, buying in on a consistent basis into the market on a whether that be monthly or, semi-annual or annually. Just make sure that there's a consistent flow going into your investments, because now you're spreading out these investments on an annual basis or whatever it is. And then you're putting money in for all of these years as well. So you're getting interest on your initial investment, but then you're also slowly dipping in there a little more and more, and that's gaining interest on itself as well. So just keep in mind of different, saving strategies that can also add to your compounding interest, because this interest, it builds on the balance each year. So if you start with $100 in 1 year and you get 10% returns, well, now you're starting with 110 the next year. And if you get another 10% on that, well, the next year, then you have 121. So that compounding interest can really add up quickly.
So what kind of strategy changes do you make when there's market issues?
So strategies that we make are just rebalancing the portfolios and making sure that we have good allocations for all of our portfolios, just because we don't know which types of asset classes are going to perform the best. And so if we can have our portfolios modified in a way where we can handle volatility, and, we could strategically rebalance when some things are up and maybe some things are down, well, that gives us the best capabilities to maximize our potential returns on portfolios, because the ultimate key to success in investing is buying low and selling high. And when you properly rebalance, when it's the right time to do so, that's when you create that efficiency in the portfolios.
Yeah, and Kim, if I can add to that, we're not against people doing it themselves if that's what they like to do. But we find as a common denominator, those that do it themselves oftentimes miss opportunities of the rebalancing, the timing of those, also having the right recipe and the right types of tax classification accounts, the right investments in Roth compared to non-qualified brokerage accounts compared to IRAs. Tax efficiency plays into that conversation significantly. And I can't stress even enough, even the smallest differences in compounding returns can lead to very substantial differences, small differences, substantial differences in the amount that your final portfolio can have in retirement over these long periods of time. We're not talking 1 to 2 year, but we're talking longevity in many years.
Well, Larry and Kyle, I'll ask both of you, what happens when someone comes in to see you and they're, unfortunately in their late 40s and maybe they haven't taken advantage of this? Is it just too late?
No, it's not too late. There's always a way that we can help fix, someone who hasn't saved previously. And it might be just more aggressive savings strategies, maybe some more aggressive allocations to try and get their account balances up a little higher than someone typically at that age. But it all depends on their situation, what they're comfortable with, and what desires they have for their life in the future. And that's why it's important to sit down with someone and you can map out a plan like that, because we'll help put together a saving strategy. We'll help put together a financial plan and, an asset allocation that best suits them to fit their goals that they need.
And I'm assuming that you guys start to really protect these kinds of investments as people start to draw closer to their retirement because of volatility.
Yeah, at Haven Financial Group, we're not limited in scope to those that are close to retirement or in retirement. And we help lots of our clients' kids at younger ages. That wouldn't be our demographic that we speak to because we do a lot of public education. It's really geared towards retirement planning, which should be done at an early age because a lot of people get behind the 8 ball and they get behind and then they're playing catch up. So yes, we tend to be a little bit more conservative because of our median age here being in the 60 to 70 range. That doesn't mean we have to be because everybody gauges risk a little bit different. But what we find is most people, lots of people, a high percentage of people aren't really aware of how much risk they are taking. And there should be some awareness and understanding because that can lead to surprises that may not be positive surprises, but a negative surprise, especially if the market takes a downturn at the wrong time. So again, it takes a discipline and use of financial strategies. It's what we use financial products. We manage wealth with Fidelity Investments and Charles Schwab in the market. We look at the big picture. What are your goals? What are your objectives? What are you working towards? How do we get there? And is that a 10-year timeline, a 20-year timeline? Again, I stress, and people hear it all the time, it's never too early to start, even if it's on a small scale. Mm-hmm. You got to start somewhere to get somewhere. So if you're listening and go, wow, we're not doing very good, give us a call, start somewhere, have a conversation. Maybe you're on better track than you think you are, or no better time than the present to figure it out.
All right. So that number is 612-504-8400. That's how you get hold of the folks at Haven Financial Group. Set up a free consultation. Talk to them about what your goals are. And if you have not gotten this kind of investing, put this kind of investing into your portfolio, now is the time to do so. 612-504-8400. You can also go to havenfinancialgroup.com. When we come back, we're going to talk to Kyle and Larry about what dividends can do for your retirement.